For the next 20 minutes, I will try to broaden the scope of the discussion beyond wholesale CBDC and CBDC to the whole of capital market or the whole of finance, and share the vision that SIX Digital Exchange has, and actually that the SIX Group, which is the exchange, the capital market infrastructure group for Switzerland and Spain, had 5 years ago when they launched the SIX Digital Exchange. It's very much in line with the debate about digital money, and I will try, of course, to embed the CBDC topic into this vision. So, at SIX Group, we believe, like many in the industry, that anything of value, and I say anything of value, be it equities, fixed income instruments, money, new types of value such as cryptocurrencies, real-world assets like real estate investments or real estate as a whole, collectibles, cows, fields, anything that has value will be tokenized on a global, digital, asset-agnostic infrastructure powered by blockchains, and I have an S at the end on purpose. So we believe that through tokenization, that value at the bottom can be made available on one single infrastructure, leading to a global digital asset agnostic market. And that's, every word is important in the red box there. Today, the world is fragmented, is siloed. Money settles in payment systems, security settles in CSDs. Hopefully, there is a link between the two to do DVP, but it's not the same system. The value doesn't sit on the same infrastructure. And what Ethereum and other blockchains have demonstrated is it is possible to have all value sitting on the same holding and settlement infrastructure, custody and settlement infrastructure. And when, for those who are in the post-trade industry, like I've been for 25 years, it is mind-blowing and it is revolutionary on how value can be held and transferred and swapped and traded and lent and everything that we do in the post-trade space. So who will have access to that infrastructure? Who has access to that infrastructure today? Because it exists today, this infrastructure, or at least the initial steps of that infrastructure exist. Well, as also demonstrated by Ethereum and other blockchains, retail or corporates can have directly access to their holdings without having to deal to have an intermediary in the middle. Yes, it's possible today. I have a MetaMask wallet on my phone. I can access the Ethereum blockchain and go on Aave and lend and borrow assets and then go swap it on Uniswap, which is an exchange. That's doable. But do I have everything on my mobile phone wallet? No, I don't, because it's a lot of, I don't trust myself. I don't trust myself in managing the cyber risk around, managing myself, the digital assets, and that will be the same for the value that I've just shared before in the future. Most people and most corporates, and also sometimes for legal reasons, asset managers, for example, cannot hold the assets that they manage. They will still rely on intermediaries or service providers. It will be banks, like we know them today, but it will be new type of service providers, like we've seen emerged in Switzerland, for example, with digital bank like Signum or Amina, who are focused on digital assets. More competition means, obviously, lesser cost for the market infrastructure in general. So you could say, okay, you are part of an exchange group, SIX Group. Where are the FMIs, the financial market infrastructure in that picture? Well, some may claim that the layer in between, the blockchain layer or the DLT layer, even if it's a set of different layers of blockchains that are interoperable, is the market infrastructure. So you don't need a SIX Group anymore. You don't need a CSD, you don't need an RTGS, you don't need anything of that sort. Well, you still need those players. Why? First, because obviously most of the assets are not in that infrastructure. They are centrally located today in CSDs, and you need to bridge traditional with the new market, the new financial markets. So that's a role that we're playing at SDX. We have a bridge with our traditional infrastructure, which means that anything we natively issue on blockchain, such as bonds, can also be traded and settled on the traditional infrastructure. And vice versa, anything that is on the traditional infrastructure can be tokenized and made available on our blockchain-based system. It's important, interoperability. Sorry, I'm going a bit too fast. So we will also play a role of of bridging between those blockchains. I mentioned that it's unlikely that will be one DLT or one infrastructure for obvious reasons, because different technology, different blockchains meets different use cases needs, and there will be a need for interoperating between the various systems. So to have assets issued by a UBS, for example, on Ethereum be accessible to the entire Swiss market via a bridge to our blockchain ecosystem. And that's what we're currently doing today as well. There's also a need to help institutions connect to this new type of infrastructure and provide the cybersecurity, the risk management, and the technology that to connect the wallet's infrastructure, in other words, to connect to that blockchain or DLT-based system. It is not trivial to do it. It's costly. Some major players will do it themselves, but others might want to rely on service providers to do so, and that's also something that we do at the SIX Group. And finally, what we will be doing and are starting to do is deploy smart contract-based services directly on blockchain. So today we're more in a world where we have a centralized system that talks to blockchain. The future is that we will deploy decentralized services on blockchain. For those who are familiar with Ethereum, Uniswap, and Aave, for example, which are a decentralized exchange and a decentralized lending and borrowing smart contract-based service, well, we see ourselves as the future institutional Uniswap and institutional Aave of the future. And we're not the only one, obviously. Other market infrastructures, Euroclear, Clearstream, and others will play similar role of a multi-party neutral service provider for the market for the financial industry. The black box there is my dear friend from the Swiss National Bank. So obviously, Swiss national banks or central banks will be very important, because one thing is very essential in this is a mean of payment, and a risk-free mean of payment. We're talking institutional business here. I'm not talking about retail. We're talking about banks or brokers trading hundreds of millions of Swiss franc or euros to buy a bond, for example. That cannot happen with stable coins. That doesn't work. That can even not happen with commercial bank money because of the risk to the issuer of that money that transaction would lead to. These transactions today are settled in central bank money, and they will need to be settled in central bank money in the future. That's the concept of wholesale CBDC. And we're lucky in Switzerland to be live with a wholesale CBDC settlement infrastructure on SDX, which allows us to issue bonds natively on blockchain and settle them with wholesale CBDC Swiss franc on the same infrastructure using with our collaboration with the Swiss National Bank. It's a pilot. It's called Helvetia 3. It's running until June, but it is live. It's production transaction. It's not proof of concept. It's not test mode. It's production mode. So how does it look like, this new world, with the perspective of a customer, of a user? Well, one of the benefits of this single infrastructure for all value is that it opens the door of holders or owners of value to have everything available from the same source of liquidity. Today, I have money at UBS, I have money at Swissquote, I have money in Belgium at Argenta Bank. If I need my money for Swiss related activities, I need to transfer from one bank to another, etc., etc. Same for securities. If I have my securities in custody with a custodian and I need it for settlement for another transaction with another custodian, I need to transfer through a CSD and so on and so forth. So it's very intermediated. And with this blockchain technology and DLT technology, we have, for the first time in history, the ability to have all liquidity in the same place from one source and then plug it in, like my MetaMask wallet on various services on Ethereum, plug it in into various services offered by banks, various services offered by market infrastructure, exchanges, and so on and so forth. It is revolutionary to the point that some people cannot grasp that revolution. And I'm going to go to the challenge of realizing this vision in a second. But the good news is that Six Group, and SDX is not the only one. We were clearly pioneering, and we started 5 years ago. We were the only FMI in the world doing what we were doing. But everybody else is joining the party, and that's the good news, because this world cannot exist only within the Switzerland market and only within one market infrastructure. It needs to be accessible from everywhere in the world, and that's why it's important that FMIs like Euroclear, like DTCC, or banks are now looking clear, are believing the same thing that we believe, that everything will be tokenized on blockchain in the future, and are deploying services to enable that, with quite a few challenges. And I'll mention them in the future, in a second. 4 main challenges. So today we operate in a world of legacy, tech and operational, and legacy operations. So we mentioned that in the morning, still very paper-based for some processes. The technology we're using and banks are using, for example, some of them are still using COBOL-based systems. Good luck to migrate a banking system to a world where you actually giving up part of the control that you currently have and giving up and sharing a ledger, because that's what it's all about at the end of the day. 24/7 settlement. That's not something we all used to, especially in the capital market with a T+2, T+1 environment, except in some markets like in China where it's T+0, but it's pretty rare to have securities transaction settling in less than a day or 2. That needs to change. As I mentioned, assets and everything really is fragmented today. So assets, platform, and regulations are fragmented. Assets settles on different platform. Regulation is per instrument type. So you have in Europe a regulator for money and a regulator for securities, for example. If you want really to have a platform that is digital asset agnostic, that needs to change. And regulations needs to be more principle-based and function-based, if you wish, than asset-based. That's changing, but it's not there yet. Standardization is also a challenge. So standardization is ongoing, so there are a lot of standardization discussions to bridge blockchains who are on different technology. You've heard of EVM compatibility, for example, so that's one example. ERC20, ERC3640, well, I mean, all those standards are great things, but more needs to be done on that space, and more standards and interoperability between traditional finance and new finance. Otherwise, it will not work. And the most difficult one to change is mindset. I've heard a study that only 20% of human beings can embrace change without questions. Like, yeah, that's cool, let's go. 80% of us needs to go through the human change management process of denial, acceptance, and so on and so forth, because that's just the way we are. We are human beings, not machines. And that is slowing down considerably this vision I've just mentioned. We have evolved dramatically and quickly in the last 5 years, and that's a good thing, but that will take an additional 10 to 15 years before we really embrace the vision that I've just mentioned. So that's about interoperability. I wanted to finish this speech with the above, well, the one you have on the screen. The good news with blockchain and with DLT is that the proponent or the supporters of that technology are looking at reusing existing stuff that are good in the traditional world and do not need to be reinvented in the new world, if you wish. And these are ISO standards. So if you might be familiar with the ISO 20022 standards, which is a standard used for messaging between banks and other and securities firms and so on and so forth, it's a very powerful data a model that can be really leveraged for any technology. It has been built to be used for messaging, for APIs, but also for blockchain. And it is being used also in the design of infrastructure around blockchain. We're using it at SIX Digital Exchange. And the payments infrastructure and the messages that we're exchanging, the interactions we're having with the Swiss National Bank, for example, around the wholesale CBDC, is ISO 222 based. So no need to reinvent the wheel. Another standard which is interesting is the ISO 24165. It's the digital token identifier. It identifies any token on any blockchain, and that's very critical because if we live in a world of multi-chains with assets that moved from one chain to another chain, you better make sure that you know what you're talking about and what tokens you are referring to. Is it the token on Ethereum or the token or the same functional token but technically implemented on, I don't know, another blockchain? Very important standard. DLEI, so the legal entity identifier. So for anything to work on a blockchain, very open architecture system like I just described, you need a digital identification of participants in that ecosystem and verifiable credentials to know what they are allowed to do and not allowed to do on a financial and legal point of view and regulatory point of view on those various services I described. The LEI is definitely a standard that should be leveraged for that. And there are many, many more. Currency code, I don't know if you even know that, but USD EUR is an ISO standard. Country code, US, FR for France is also ISO standards. Those ISO standards have revolutionized the way traditional finance functioned and how globalization was actually enabled partially by standards. We need to continue in this new world of decentralized finance or more decentralized finance. The same applies for CBDCs and central bank digital currencies. No reason to reinvent the wheel. We don't need a new currency code standard. The currency code exists. We just need to apply existing standards to new technology. So to finish, I'll say that that's our motto at SDX. We know that the journey is going to be long and will be long, but the direction of travel is clear. And no, there is no doubt about if, it's more a question of when and how fast we will get there. Thank you.